All right, let's jump right in. We've all been told that buying a home is like the smartest financial move you can possibly make. But what if that's not true? What if it's all just a big illusion? Today, we're diving into the real estate illusion to ask a pretty provocative question. Is that dream of homeownership actually a financial trap waiting to spring?
And the source material for this kicks off with a real gut punch of a statement. It says, for many, a home is a financial trap disguised as a dream. Whoa. I mean, just let that sink in. That one sentence pretty much flips the script on everything we've been taught about building wealth, right? And it forces us to ask a really important question.
Yeah, exactly. How can that even be possible? I mean, we're talking about the cornerstone of the American dream here, the ultimate symbol of financial security. How could that be a trap? Well, to figure that out, we've got to first dig into just how powerful that dream really is.
So let's talk about the great real estate dream. Is it really the bedrock of financial security? You know the story. We've all heard it a million times, from our parents, financial gurus, pretty much everyone. The message is always the same. Owning a home is the most critical financial step you'll ever take. It's framed as this absolute foundation for your entire life.
It really just boils down to this one simple equation that's been hammered into our heads forever. Homeownership equals wealth. Simple, powerful, and honestly, it's a really appealing idea. But, and this is a big but, as we're about to see, this simple formula is missing some pretty huge pieces of the puzzle. And look, you can totally see why this belief is so powerful, right? The perceived benefits are huge. You get a tangible, real asset you can touch. Your monthly mortgage payment feels like a forced savings account. You're told it's pretty much a guarantee that its value will go up over time. And of course, there's that amazing feeling of emotional security and stability. It really does sound perfect. But this is exactly where the illusion starts to crumble a bit. Okay, so let's unpack this idea of the laziest investment. Is it all passive growth, or is there a hidden grind? The source actually calls real estate the laziest way to build wealth, and believe me, it's not meant as a compliment. The whole idea is that you just buy a house and poof, its value goes up while you're sleeping. But is it really that simple? Is it truly passive, or are we just ignoring all the hard work that goes on behind the scenes?
And that leads us to a classic but absolutely crucial financial question. Is your home an asset or a liability? The definition is actually super simple. An asset puts money into your pocket. A liability takes money out of your pocket. So, when you think about your home, which one is it? The answer? Well, it's a lot more complicated than it seems.
Okay, so check this out. On one side, you've got the myth of passive growth. You know, the idea that your home's value just magically increases while you sleep. On the other side, though, you have the reality. And the reality is a constant need for repairs and maintenance. The myth says it's a simple one-time purchase. The reality? It's ongoing expenses like property taxes, insurance, HOA fees, you name it. The roof is going to leak, the water heater will break, taxes are always going to go up. It is not a passive investment. It's an active and, frankly, very expensive commitment. So, take a look at this. This chart breaks down the true monthly housing cost, and it's pretty eye-opening. We like to think our entire mortgage payment is building our wealth, but let's be real. Look at that tiny slice for principal, just 25%. That's the only part that's actually your investment, building your equity. The other 75%? That's just the cost of owning the thing. 40% is interest going straight to the bank, 20% is taxes and insurance, and another 15% is for maintenance and repairs. That money? It's just gone.
Okay, and here's another key concept from the source that a lot of people just don't think about: illiquidity. What does that mean? It's the inability to quickly turn your asset into cash without taking a big financial hit. See, you can sell a stock in, a few seconds? But your house? No way. Getting your money out is slow, it's expensive, and there's no guarantee. And this idea of illiquidity becomes really, really important when we start looking at the future.
All right, so this brings us to the riskiest bet for 2026 and a forecast of a coming storm. This is where the source starts to pull all these different threads together into a pretty specific prediction. It argues that this combo of hidden costs and this whole illiquidity problem is creating a really risky situation, one that it says could really blow up right around the year 2026. So the big question is, how do we get there? Well, this timeline lays out the factors. It all started back in 2021 with those crazy post-pandemic market shifts. Then in 2023, we got hit with rising interest rates. The source predicts that by 2025, the next big domino to fall will be major changes in work-from-home policies, which could force a ton of people to move. The idea is that all of these things will collide and create a projected risk apex right there in 2026.
And that's where we run into what's called the illiquidity trap.
Just imagine for a second, the market takes a nosedive, and you have to sell. Maybe you lose your job, maybe your company says you have to move. All of a sudden, you are completely stuck. Your biggest asset is totally frozen. You can't get your money unless you're willing to take a huge, painful loss.
Let this number sink in for a minute. 90+ days. That's the average time it takes to sell a home. And that's in a decent market. If things go south, that could easily stretch to 6 months, a year, maybe even longer. So if you need cash right now, today, your home, your so-called biggest asset, is basically useless. That's the trap.
So, where does all this leave us? What's the point of all this doom and gloom? Are we saying you should never, ever buy a house? No, not at all. The goal here is to get beyond the illusion. It's about getting a clearer view of what is likely your biggest investment. It's not about shattering the dream, but about looking past the fairy tale and seeing the reality for what it is.
Here's the bottom line. The goal isn't to just dismiss homeownership. The idea is to recontextualize it, to look at it with a clear view of its true costs and risks. A home isn't just a number on a spreadsheet. It's a place to live your life, and that lifestyle choice comes with real costs, real work, and real risks. It's probably best to think of it as a life decision first and a financial investment a very, very distant second.
So to make this super practical for you, the source leaves us with 3 questions to ask yourself before you even think about buying. Number 1, what is the true all-in monthly cost? And I mean everything: taxes, insurance, and a realistic budget for repairs. Number 2, does this fit my need for liquidity? In other words, how would you deal with a big financial emergency if all your money is tied up in the house? And number 3, be honest. Am I prepared for the work of ownership? Because it is work.
And all of that leaves us with one final, really challenging question to think about. Is your biggest asset also your biggest risk? By putting so much of our net worth into one single hard-to-sell, high-maintenance thing, have we actually turned our greatest strength into our greatest weakness? It's definitely something to think about. Thanks for joining this explainer.